2014 marks the 40th year anniversary of Affinity Wealth Management. From a simple stock selection enterprise, the firm has developed into a robust financial planning portfolio builder with numerous awards and recognition. While the achievement of 40 years is a celebration of the firm's history, it is also a celebration of the people and clients who helped shape the company's success. Affinity Wealth Management began in a year of market chaos and anxiety. 1974 was among the most treacherous market declines on record for investors, falling by 43% in just 9 months. Watching the markets plunge, Dr. James Kalil, an accomplished DuPont engineer and former Army intelligence officer, wrestled with the question, how can I take advantage of these falling markets? There were several options Dr. Kalil considered. He evaluated the popular investment trend of the go-go 1960s, growth investing. Growth investors purchased fast-growing companies without a focus on price. But as 1974 proved, growth investors may lose gains in a down market. Dr. Kalil instead chose value investing. Value investing searches for bargain stock prices and unrecognized value. Applying his work ethic and scientific discipline, Dr. Kalil was confident he could beat the markets with a value investing approach. With only a few small investors and limited resources, Dr. Kalil launched Affinity Wealth Management in 1974 under the original name CompuVal Investments Incorporated, in which he implemented the motto of value investing, buy low and sell high. Over the next several years, with rising interest rates, growth companies were crippled in a period called stagflation. But it was the perfect financial environment for value investing. From 1975 to 1985, CompuVal posted remarkable returns of over 30% annualized. This rare accomplishment meant CompuVal was on a roll, and little did Dr. Kalil realize just how successful his value investing would become. In fact, the story of CompuVal was becoming a national one. Jim Kalil was named one of Money Magazine's 10 best pros to manage your money, and Kiplinger's repeatedly recommended Dr. Kalil. To deal with the increased demands of managing a larger firm, in 1989, Dr. Kalil enticed his oldest son, Don, to return from his sales career in California to help manage the firm. After the 1991 Desert Storm War and the economic recession, the Federal Reserve began to lower interest rates. By the mid-90s, the American economy and markets began profound change. With the growth of the technology industry, the markets returned to a focus on growth investing. Value stocks became hard to find. Faced with a new challenge, Dr. Kalil and Don realized they had to reassess the firm's approach to stock investing. The company at the time was a stock picker, trying to exploit the differences in stock prices. The increasing volatility of the overall stock market was overwhelming the practice of picking individual stocks. A better way to build wealth was portfolio building. This meant including multiple assets, both corporate and government bonds, both value and growth stocks, both small, fast-growing companies and large blue-chip corporations. The firm entered 1999 celebrating its 25th anniversary and began a series of important changes. The first was a shift to portfolio building. The firm then began construction of their own facility, the Affinity Wealth Building, a Wilmington landmark, where they're still located today. Another change included a name change to Affinity Wealth Management. To a disciplined value investor such as Dr. Kalil, the lofty market levels of 2000 seemed irrational and undoubtedly could not last. As he expected, in 2001 the market plummeted. Because of the extreme overvaluation of the dot-com bubble, Dr. Kalil began to search for a disciplined model to react to severe stock market declines in the future. 2 years later, Dr. Kalil formally released the celebrated Bull and Bear model and the Quarterly Momentum model. The Bull and Bear model avoids bear market declines, and the Momentum model is a shorter-term model that shifts to positive areas of the market. After 30 years of success, Affinity had helped its clients achieve considerable wealth. As a result, clients increasingly needed personalized portfolios that employed different allocations of assets, depending on their specific goals, level of risk tolerance, and tax considerations. By the late 90s, these collective services were emerging as a part of a formal discipline known as financial planning. To access this new form of financial advice, Affinity attracted seasoned advisor Jim Hall. Jim carried the professional credential Certified Financial Planner, or CFP. In 2008, markets faced the worst decline since the Depression, triggered by the historical housing bubble. As markets plunged 52%, Affinity's new investment models were being put to the test. Over 2 years, Affinity's portfolios strongly outperformed in the severe down market. Clients, on average, had saved 2/3 of the decline, compared to the S&P 500. Over 40 years of incredible changes in investment markets, Affinity has learned that the tools for successful investing are always changing. Today, Dr. Kalil's legacy of investing discipline continues under the firm's current owners, Don Kalil, Jim Hall, and Brendan McPoyle. Affinity also continues a tradition of putting the client's interest first. Recently, the firm won another 5-star wealth management award. The value of individual planning has helped pay for college educations and has delivered many of the retirement plans our clients dreamed about. Our clients have successfully helped build some of the largest charities in the region, and many have built lasting family legacies. It has been our pleasure to have a hand in those successes. Affinity Wealth Management would like to thank our clients for investing with us. We would not have reached 40 years of excellence without your trust and support. Thank you for sharing in our journey and creating a 40-year history of success.